Welcome to the weekly update, where I'll go over the action in the market for the week of September 25th through the 29th, and then we'll see how things are looking for the week of October 2nd through the 6th. We had another negative week. We are beyond September now, so the week seasonality that we've been seeing, it doesn't mean that October is necessarily better. There's some research to suggest that we still might be in a weak season. There's other research to suggest that we might see a bit of a bounce. On the daily charts, we are still in a short and intermediate term downtrend that's now been confirmed by the ADX, but we're also dealing with an oversold condition, and we're looking at some positive areas that may be coming through to suggest that maybe we'll see some kind of a bounce. Now, those positive things could go away quickly. It's just what we're seeing right now. Before I get started, please know that there's a PDF that's available in the description below each video that I post. I was using a shorter URL, but YouTube started to delete those. And so now I have the longer URL there that you'll have to click on. I do have a private Facebook group that you're welcome to join. I'm the only one really posting right there right now. If you want to join and ask questions or interject any opinions or discussion or what have you, please feel free to do that. I will be going through the poll that we just got done with, and then I'll be posting a new poll for the upcoming week. I really keep a close eye on YouTube comments. In fact, before I recorded this, I had to go through and delete a bunch of comments that were made after I posted the daily video. And it's the garbage ones. I don't care if you're positive or negative. You're free to express however you feel about the videos. It's the garbage ones and the bot comments that I get rid of completely. And it's pretty easy to tell the difference between the two. Also, I post on Rumble as well as YouTube, and here's the channel that you can access that. It's also in the description below if you prefer to access the videos through Rumble. Let's go back and talk about the session. For the week, we were down 0.74%, another down week, but volume continues to be below average. Now, we're seeing it pick up a little bit, but that might be due to the fact that we were at the end of the quarter and you had some shoring up that had to go on there. But for the most part, when we look at the weekly average for volume, we are still below the average level. And the technicals, as I said in the daily video, and I shared here, that the daily charts are looking more negative, but we're dealing with an oversold condition. Things might be showing some improvement. On the weekly side, we are turning more negative, but there's also some positive things that we can latch onto. It's about inflation, interest rates, growth concerns, and what is the Fed going to say? And then ultimately, what are they going to do, especially when it comes to interest rates? Our trend is weakening. The ADX is underneath the moving average, and this time we've seen a change where the red line has crossed below the green line. So now we are in a negative weakening trend. For the week, the Dow was down 1.3%, the NASDAQ was up 0.1%, the S&P was down 0.7%, and the Russell 2000 small caps, they were up 0.5%. So we saw a real mixed week. So we were mixed where the NASDAQ and the Russell 2000 had small gains, while the S&P and the Dow declined, and we're also dealing with a very bad month where September is the weakest month of the year. We don't know if October is going to be good or bad. Sometimes it can be quite a good month, but when you look at 1987 and all the different 1929, all the times that we've had crashes, they typically have come in October, but we've also seen some positive months as well. Oil, interest rates, and the dollar are going up, and this is putting pressure on stocks. We're also dealing with the fact that, at least the last time I checked before recording this, that it looks like we're going into some kind of a government shutdown. They didn't reach any agreement with that. The United Auto Workers strike is still continuing, and I did check on that a while ago, and it looks like they're ramping up, and it doesn't look like that is going to be resolved, at least very soon. And then student loan payments are going to resume in October, and that could be a drain on the economy. We're also keeping an eye on the VIX. We look at an average from 1990 through 2022. That's the blue line, and typically what we see is this blue line is going up. And when this is going up, that means stock prices are going down, and that lasts till about the middle or so of November before we really, October, before we see some kind of an improvement there. We're also keeping an eye on inflation. We're comparing what's happening now with the period of 1966 through 1982, where if we follow along kind of what we've been following before, we should see inflation continuing to decrease. Unfortunately, the news doesn't stay good after that. We see a real spike up in inflation. Now, it doesn't mean we're going to follow along with this, but so far we've been kind of following along with what has happened before. And a lot of people out there like to compare what happened in 2007, 2008, what happened in 1970, whatever. I like those things, and I think they're useful, and I think they're interesting, but I don't base decisions on those things. Here's some research that's suggesting that as long as we're above 4.02% with the 10-year yield, which we're at 4.57% now, that is when it starts to have an impact on the earnings of stocks and can bite into their overall profits and put pressure on stock prices. Getting into our poll results. The first question, a new negative trend is developing. Now, remember, this was a week ago that I asked these questions. And do you jump in at the first sign of a new trend? 17% said yes, where 83% said that they wait for more confirmation. Then, if the S&P bounces this week, the week that we just ended, do you feel that this will be a short-term bounce or before a bigger decline, or that we will turn back to being positive? 64% said that if we get some kind of a bounce, which we really didn't get this week, that it will lead to a bigger decline. That was 64%. And then 36% said that we will actually turn back and look more positive. I also asked, the S&P continues to show seasonal weakness in the month of September. Do you feel that this will end at the end of the month or will continue? 20% think that it will end, where 80% think that we're just getting started before there will be bigger declines. Then also the FOMC has been coming out and making a lot of statements, and these statements ended up being more hawkish. Do you feel that this will lead to rates being raised? 43% said yes, 57% said no. So we look at some Isabel Net blog charts here, and some of these I've been showing before, but this is an updated chart. The black line is the S&P right now, where we might see some kind of, not now, but this is what historically has happened. The red line is what's happening right now, where we might see some more weakness as we enter into the month of October. But then after we finish with this weakness, we typically see, historically anyway, a rise up out of that. Also looking at the Carson research, we're dealing with this yellow area, which sometimes it can get pretty bumpy throughout this time, but then we typically will see some kind of a rise going into the end of the year. Then we look at 1950 to 2022, where this is pointing where we're at right now, where we might see some historical weakness developing. The reason that stock prices are even going up anyway is that earnings are still looking pretty optimistic going out into the future. FactSet just had one blog post. It says a record number of S&P 500 companies are issuing earnings per share guidance. That means that they're coming out and having to revise their earnings estimates, and it's getting to a high number. Now, whether it's higher or lower, that can be positive or negative, but the fact that a lot of them are coming out and having to revise things, that influences the market, because the market goes on what the previous analysts were projecting. And if the company comes out and changes that, that could have either a positive or negative impact on their price. Looking at our charts, where here's the intraday chart going back to Monday, we were pretty much flat. Then we gapped lower on Tuesday, and we saw a pretty significant down day there. We tried to gap higher on Wednesday, but then went lower. But this was kind of positive. We saw some late day buying coming back into the market. We were pretty much flat on Thursday, saw some strength, and then kind of trailed off as we went into the close. And then Friday, it looked like it could have been a pretty good day, but we went up to this R1 level, which is also the August 2022 level. That acted as overhead resistance, and then we spent the rest of the day falling back down. So here's a look at the week for the indexes, where all of the indexes, we're down on the week, but please keep in mind, this is just the 5 trading days for the past week. We go back to the beginning of the year where all of the indexes, except for the small caps, have positive gains going back to the beginning of 2023. Then when we go back to the all-time high, all of the indexes continue to be underwater. Looking at different sectors where we had a down week, so I sorted this where we saw energy, which has been strong lately. It was down the most, followed by the financial sector. That's more the banking issues, and healthcare. These are more value areas, where the areas that weren't down as much, you had tech or real estate, which has been getting just hammered lately, and discretionary, which has been a better performing sector this year. These two areas were up, and we saw a little bit of a bounce from real estate. We look at our relative rotation graph, where energy is now showing some strength, and it's getting in the +1 category. Remember, we look at this according to the x-axis and the y-axis. So this is the plus area showing the most strength. We're seeing some weakness in communication and in discretionary and in tech. They're still strong, but they are pulling back a bit, where we're seeing some of the other sectors showing a little bit of strength, and that's when they're registering here in blue. Then we look at the different sectors just for the week, where utilities are just getting hit. And we're seeing that because rising interest rates and the dollar, they're really pressuring some of these different areas. Where we had energy was still up for the last 5 trading days, followed by communication and materials, but we were pretty much kind of split down the middle between positive and negative. Going back to the beginning of the year, we have communication, tech, and discretionary doing the best. All of the other sectors are negative. Then going back to the all-time high, we have energy, which is still hanging on to some of its gains. And then way over on the right, we have real estate and discretionary, which are still underwater since that time. Looking at sentiment, we did get extreme earlier in the week. Right now we're at 28. That's negative, where they call it fear here, where we did drop below just for one day, below 25. That's an extreme negative reading. We're going to wonder, are we going to be able to bounce up out of this and then have things turn more positive? The active asset managers, they're also showing a little bit more pessimism now, where we saw a decline in their reading. And their latest rating is 43.01, where it has declined from the previous week. Looking at the VIX, where we're coming up, we're seeing an increase in fear with the VIX, with the line chart and the bar chart. You notice how we almost got up to 20 there for a while, but overall, the reading is still quite low. The Ulcer Index is showing that there's also an increase in fear. We're coming back up to the moving average. The RIDEX Bear Bull ratio did see a spike up. These are folks that react to what's already happened. And as we've been hitting some difficult times, this ratio has been going back up. We have the I always do that. The American Association of Individual Investors, they also tend to react to what's already happened. We had a down week a week ago, and so they are dropping down and looking more negative. This is still positive, though. The black line going down, that's positive. You have to kind of reverse engineer this in your head. When we were having trouble in 2022, this black line was going up. What this chart does is it compares cash and to say, okay, is tech underperforming or outperforming, actually keeping the money in your wallet? When this black line is going down, that means tech is outperforming. When we got into 2022, that meant cash was outperforming. Well, as this is still declining, it means that tech is back to outperforming, even though it is spiking up lately. Looking at the economy, we have GDP. We had another release of an estimate this past week. We're just a little bit under 5% with the GDP now forecast. When you look at the top and bottom forecast, we're just a little bit under 4% and at about 1.5%, but it's still looking positive for GDP. Here's a bar chart showing how it's still pretty high. It's just a little bit under 5% right now with the forecast. Then we look at the spread between risky and not as risky bonds. If we were running into trouble, this ratio would really be spiking up. It's turned up just a little bit, but it's continuing to go lower overall. Then we look at the financial conditions index. If we were running into trouble, we would be going above this black line, and now we are declining. Then these next charts haven't been updated. This was July 31st. These are the tightening standards that banks are putting on folks that want to borrow money. And then the real-time SOM rule recession indicator, we're doing okay right now, but we haven't had an update of this since September 1st. If we were running into trouble, we would be going up above the red line. We would also be going above the red line with the smoothed U.S. recession probabilities, but we're just barely above the black line. The Brave Butters Kelly leading index hasn't been updated since the 5th of September. It's going up a little bit, so we want to see if this is going to update over the next week and give us some more insight. Looking at inflation, we did have PCE come out on Friday, so we're seeing some adjustment with how folks are viewing inflation, and it's actually been ticking down slightly. Looking at the Fed, there is an 81.7% chance that when they meet on November 1st, they are going to leave rates unchanged. And we can see how this has changed over the last week or so, where the dark blue area is where we're at now, and it didn't really change from a day ago, a week ago, and it has come up a bit from a month ago. Looking at the Fed balance sheet, it is continuing to decline as different debt instruments that they were carrying fall off their balance sheet. And here's the look at the change going back to where it was versus a year ago, and it's also showing a decline. Getting into our charts, we're starting to come down a little bit based on price. When we look at the advanced decline line, we're already dropping below the moving average based on volume. And we're seeing that in the daily charts as well, as volume is tending to lead price lower. Looking at the new highs versus the new lows, we continue to decline. Didn't see much of a change in here, but we're declining with our 4-week moving average as well as our 10-week moving average. That's negative. Our advanced decline ratio, it's still positive, but it is declining. It's just barely above the midpoint. Accumulation distribution, dropping below the moving average. This tries to measure the smart money. We're also seeing it drop below the red line on the daily chart. So this is more negative. Keeping an eye on our trend, where we see the green line cross below the red line, the ADX itself is declining and below its moving average. So it's a weakening negative trend. Looking at the Arun, where we're seeing buyers start to fall off, we're seeing sellers start to pick up. So our oscillator is going down, but it's still above zero. This is still positive, but more negative in the shorter term. The mass index is not generating a signal right now. I was following a signal that was generated on the daily chart. I've stopped doing that because enough time has passed now. Looking at some other charts, here's the daily chart where I thought we would come down to this trend line and possibly bounce up off of that. No, we come down, we fall a little bit below it, we go a little bit above it. We're pretty much right on that trend line. Looking at the trend channel, I've also been showing this in the daily video. We're just about at the midpoint right now. And because this is a longer term chart, I have other charts that are a little more accurate. I tend to say when we're above the midpoint, that's more positive. When we're below the midpoint, that's more negative. Then looking at the pivot points where we hit that resistance back in July, and we've been having trouble ever since, and we're continuing to decline. The 50-period simple moving average, we're still positive. The red line's still going up, even though we're seeing price coming down. The long-term trend, we're still in that trend where the blue line is above the red line, even though we're seeing some weakness. The McClellan oscillator, after giving us an extreme negative reading, it's actually bouncing back up. That could be positive. But the summation index based on price is declining, as well as declining based on volume. The Swenlin trading oscillator, we tick a back up just a little bit on the weekly chart here, but we're still below zero based on price and volume. The bullish percent index, we're seeing pretty much that same thing on the daily chart. We're below 50 and declining. That is negative. And then looking at our PMO study, we're rolling over with the PMO. We're below zero based on price and volume. Our PMO study, after getting extreme negative, we're starting to tick back up with the PMOs that are rising. We're starting to go more extreme negative with the buy signals, and we're declining with the PMOs that are above zero. The percent B indicator, that measures when we go outside the upper or lower Bollinger Band. We're dropping below the midpoint and not getting an extreme reading, but the fact that we drop below this is turning this indicator more negative. Looking at all of our oscillators, we are going down now on all of the different time frames. We're seeing that same thing on the daily charts. although some of the oscillators are getting extreme negative, like the slope and the MACD, where sometimes they hit a bottom and start to turn back up. The chicken money flow, we're still just barely positive here, but we are declining. We're pretty extreme negative on the daily chart, and we're wondering if we're getting to an extreme reading right now. But until we see some confirmation of that, we are turning more negative with this chart. The Chaikin oscillator continues to decline and is getting near an extreme negative reading. The force index is below zero and declining. That's negative. The money flow dropping below 50 and declining. This is getting very close to being extreme on the daily charts. The rate of change, since we had a down week, but it wasn't as much as the previous week, but we're still below the midpoint. Going back 50 weeks after getting what could be considered an extreme positive reading, we're starting to drop back down. The RSI is dropping below 50 and declining. That's negative. The weekly special K chart is below the red line and declining. The daily special K chart is still positive. The Stochh RSI is giving us an extreme negative reading. The Williams percent are also extreme negative. The ultimate oscillator below 50 and declining, even though it ticked up slightly this past week. The vortex, this is another change that we're seeing. The green line is crossing below the red line, so that's turning more negative. The Kopit curve is going down right now. That would be negative, and it's not giving us a signal right now for a buy signal. And here's the weekly chart where we're coming down to the 50, actually this is the 40-week moving average. Now, something interesting is happening on the daily charts. Right now, the 200-day exponential moving average could be providing some support. This is a simple moving average that I'm showing you right here, and they move a little bit slower. So we're just keeping an eye on that for right now, and I'll show you that when I get to the daily charts. Our different chart variations, we're looking more negative with the Heikin Ashi. We're turning negative now with the Kegi. We're still looking positive with the Renko, but we're looking negative with the 3-line break. Looking at the ease of movement, we're below zero and declining. That is negative. And the point and figure did generate a new signal. We had a couple of new zeros that were generated this week, and this is a double bottom breakdown. We're seeing that same signal being generated on the daily charts. Looking at our trading systems, we are negative with the Elder's Impulse system, and we're still negative with the Parabolic SAR because the dots are on top. And then our longer-term PPO study, we're rolling over a bit in the long term, we're dropping negative in the intermediate term, and we're turning more negative in the short term. Some daily charts. This is put out by David Keller from stockcharts.com. It's a couple of days old now. He suggests that maybe we're seeing a confirmed head and shoulders top, where you have the left shoulder, the head, and the right shoulder. If you use patterns like this, you might agree with that. Others might want to use other indicators to reach their conclusions, but I just wanted you to be aware of this. This is the daily chart where we're coming down to the longer term trend, where we're going a little bit below, then a little bit above, then we're pretty much right on it. So we're wondering if this support level is going to hold. If we drop below this, that's going to turn things a lot more negative. We're also in the middle of our 50-day cycle. There'll be a new cycle that will be generated on October 11th, which sometimes we see a change in trend at that point. Sometimes it turns and goes up. Sometimes it turns and goes down. Other times, price just continues on its merry way. And looking at a ratio between the Dow and the transports, we were seeing some improvement here, but now it's starting to come back down, which could be positive for the S&P. That means that transports are showing a little bit more strength than the Dow. The NASDAQ, we're keeping an eye on this 50% retracement level where we didn't hit it and bounce off of it like we did back in August. We're chopping above and below that level right now. NASDAQ 100, this could be positive. See how we're coming down and putting in some kind of a low bar here and then showing a bit of an improvement where this is a series of higher highs and lower, higher highs and higher lows. I always get that mixed up there. But this is more of a chart pattern that we're seeing, not so much that we're seeing this being confirmed by our indicators. We're also kind of seeing this with the S&P 500, where we came down to the 200-day exponential moving average. And then, even though we were down on Friday, we're seeing higher highs and higher lows here. We're also back below this 100% retracement level, and we tried to come up to that, but now this is acting as overhead resistance. Looking at a longer term fib chart, we're dealing with this 61.8% retracement level. Are we going to be able to get back above this? We closed below it. We tried to peak above it a little bit on Friday, but we ended up closing down below that level. Looking at seasonality, where we're finally done with September, we were down 4.2%. Now we'll start to deal with October. Then looking at a blank chart of the S&P, the mid caps and the small caps, we're seeing pretty much across the board weakness now. The small caps have been underperforming, and we saw a bit of a breakdown this past week with the mid caps. Both of them are underneath their 200-day moving averages. The Dow continues to be in an uptrend, even though it's starting to drop below this longer-term moving average. The NASDAQ is still in an uptrend. The NASDAQ 100 is still in an uptrend. The mid caps, they're still in an uptrend, but see how they broke down below this red line? That's not a good thing. And we're also seeing a bit of a breakdown with the small caps, even though they're still in a longer term uptrend. Then the NYSE, some weakness here, but still in an uptrend. All stocks, weakness, but in an uptrend. The 30 biggest software companies, weakness down around the red moving average here, but we're still in an uptrend, even though it's weakening. The FANG index is also pretty much going sideways right now. You see, we might have put in some kind of a double bottom here. Now, if we fall down below that, that's going to negate what you're seeing here. But so far, this suggests that on the daily charts, support is continuing to hold. ARC is also down. Actually, they were up on the week and dancing around the red moving average here and is continuing to be in an uptrend. The bank ETF that we follow is showing some weakness here. We're rolling over with the MACD. We're below 50 and declining with the RSI. This is showing the deposits for all commercial banks where it's starting to go back up slightly. And then looking at a blank Dow theory based on the traditional idea of Dow theory, where we're starting to see a little bit more weakness when we compare the transports to the Dow. But on Friday, they were up where the Dow was down. And we're seeing really strong weakness now with utilities. They're just really dropping down, and they could be falling below support here on the weekly chart. Some other markets. Here's the CRB index, which continues to be in an uptrend. Oil is still going up. It closed off of its highs, but it's still above 90 now. Copper is continuing to be in a downtrend on the weekly chart. It's also going down on the daily chart. The dollar is continuing to be strong. It's up into the 106 area now, where gold is still in an uptrend, but look how it really fell off this past week. And silver also saw some weakness, but it's still in an uptrend. Keeping an eye on bonds, we are now in a downtrend with our total bond ETF, but we're still looking at stocks outperforming bonds when we look at a monthly chart that's a ratio between the two. And then this is interesting too, and this might have to do with the government shutdown that we're dealing with. We take the 1 month yield, subtract the 3 month yield, and we're getting an answer of 0 right now. It should be a negative answer, and some of the uncertainty that's going on might be producing this. The last time we saw this really gyrate was during the debt ceiling debate and crisis. Then looking at yields, where they're continuing to go up overall on the daily chart. And on the weekly chart, we saw the US rates actually go back above the UK rates now. And Germany is also continuing to climb. And even the Japanese rates are going up. So we're seeing a real expansion of interest rates globally. Looking at some relative studies. First, we look at oil, which is doing the best right now, followed by stocks, then the dollar, and then gold, and then bonds have gone negative. They went negative back in August and continue to do so continue to be negative based on price. When we go back to the beginning of 2022, oil is still in the lead, followed by the dollar and gold, where stocks and bonds are still negative. The NASDAQ to S&P 500 ratio, the NASDAQ 100 to S&P 500 ratio is still showing that the NASDAQ 100 is outperforming. The S&P 100 still continues to outperform the rest of the S&P 500. Growth is still outperforming value, and gold is really underperforming the S&P, and we saw a recent death cross with this ratio, and gold is also underperforming the dollar, and bonds continue to underperform stocks, and low volatility stocks. We're wondering if we're coming down and making some kind of a double bottom here. We haven't come quite back down to this level yet, and it's been showing a little bit of an improvement. And discretionary continues to outperform staples. That helps more the growth versus value scenario. Energy, it is bouncing back up, and tech has been weak lately, but energy continues to underperform tech. And then our long-term studies, we're looking at the NYSE breadth thrust going from October 2022. We came up out of that, and this is a buy signal that's still on the books. And then we had a swag NYSE breadth thrust, which was generated back in March. That is still on the books, even though it's been coming down and dropping down to these extreme negative readings. The Zohorchak method is still generating a buy signal. So these are longer term seasonality and setups that I talk about in every daily video. This is just to go through these charts. Then we look at the long-term trend going all the way back to the 1987 crash, and we're still below the trend line when we extend this out further. Here's a shorter term look at that same trend line where we're having a hard time dealing with this pretty long-term resistance level. And then the NASDAQ 100 also is underneath this longer term trend line. The NASDAQ to Dow ratio is pretty much chopping around, not really giving us all that much right now, but this could be longer term negative for the market. And then this is a week old now, where we compare the NASDAQ 100 with the Russell 2000, which are small caps, where it looked like they were topping out based on where they were back in the dot-com boom and then resultant bust. Well, I do that a little bit different. I compare the QQQs with the small cap ETF, the IWM, and we're pretty much chopping around right now, and we haven't come up to the level where we were at back in 2000. Some momentum studies where we're declining with the MACD currently. That's the one oscillator that I kind of pull out and look at. So what's our outlook for Monday? And this is just based on the daily video, and it only applies to Monday's session. We will be getting some earnings reports. The UAW strike is still continuing. The government shutdown is happening now, and student loan repayments are restarting. And I went through those. The technicals on the daily side are negative. We have a short and intermediate term downtrend that is now confirmed. The ADX is above 20, but we might be seeing some signs of improvement. We will get the S&P Global US Manufacturing PMI, the final reading, as well as the big one will be the ISM Manufacturing Index and construction spending, and then keeping an eye on all the different things that are happening throughout the globe. Here's the economic calendar for the upcoming week. It's going to be heavy on employment information. We'll get the JOLTS job openings on Tuesday, the ADP employment change on Wednesday, weekly jobless claims, and then we'll get the big employment report coming out on Friday. We're also going to get the ISM non-manufacturing on Wednesday. Here is the new statistics for the month of October, where after we get through September, that ends the worst 6 months. So how do we look over the last 72 years? We're up about 60% of the time and down about 40% of the time. But when you look at just October 2nd, which will be Monday, we're neutral to positive pretty much across the board with the Dow, S&P, and NASDAQ. Now we're going into the month of October, where during a time that we're dealing with now, we have a sitting president who is at least announced that he's running for re-election. And that's the green area now, where we might see a little bit of a bounce going into the early part of October, but then we could see some weakness in the latter part of October. And here's the Carson chart that I showed earlier, where we might see some bumpiness before we have a year-end rally. Then looking at the NASDAQ, where we might see a bit of a bounce in the early part of October and then some weakness later on. And we're seeing pretty much that same thing. The green line is the S&P, a little bit of a bounce and then some more weakness. But then going into the end of the year, historically, we tend to be stronger. Here is the pre-election year from 1950 up to the present time. Measuring the month of October, we're up 10 times out of 18, and we're down 8 times out of 18. So there's a slight edge between positive over negative. And then I just wanted to include this. I don't trade this market, but some of you might do this. This is a seasonal chart of Bitcoin, and you could take some positive or negative things out of this. If you go with what was happening from 2018 to 2022, you might see a bit of a bounce. But if you look at 2011 through 2017, we're pretty much flat. And if you look at all the years together, we don't see much of an improvement during this time. So our scenarios that just apply to Monday's session, we're focusing on the downside right now. We cannot justify going with the upward trend. There's just not any confirmation right now. We might be seeing some improvement, but we're not seeing any confirmation of that. And we're no longer going with the sideways trend because both of our ADX charts are above 20. So the warning signs, the long-term trend signals for the NASDAQ 100 and the S&P, we're still well below those lines, and that could be negative. We're heading into at least a better time. Not that October's always great, but it tends to be better than September was. The long-term equity put call ratio is going up, and that's negative. The risk on posture, it's been showing weakness, but we did see a bounce over the last couple of days. All of the daily oscillators that we follow are still negative, and the NASDAQ oscillator that we follow is also negative. The cumulative new highs and new lows for the NASDAQ are also showing weakness. The 3-month yield is above where it was back in 2007. We're waiting to see if that's going to roll over, and then is that going to issue us a warning sign? The S&P is underperforming utilities, and the Staples to S&P 500 ratio is going up. We want to see that going down in this kind of an environment. The Russell is below its 200-day simple moving average, and on the daily chart, we're wondering, is a head and shoulders top being formed there? The parabolic SAR daily chart is negative, as well as the vortex chart. And then we're just dealing with earnings season as they happen. Positive things, we do have seasonality and setups that are in the background that I did go through in this video. The daily special K chart is still positive, but the weekly chart is negative. The S&P is still above the downtrend channel upper line. The Russell, the small caps, and the mid caps, even though they've been under a lot of weakness, they did generate recent golden crosses on the daily charts. The equity put call ratio is going down, and we've seen that a couple of days now, and that could be positive for the market. Small and mid cap growth continues to be positive. The financial sector, even though it's been getting hammered, has generated a recent golden cross. So our conclusion, we are negative right now. We have a short and intermediate term downtrend that has been confirmed, but there are some signs of improvement. In the short term, we're negative but oversold, but could be improving. Also, we're seeing a negative trend and becoming more oversold in the intermediate term, but we're still positive in the long term. Thank you. I hope you found this helpful. Please feel free to check out the other videos that I post. I hope that you have a great weekend, and I will talk to you in the next video.